In this video, we're going to go through all of the different options for investing in different S&P 500 ETFs, the different factors that differentiate these ETFs from each other, and which one might actually be the best for you to invest in. Let's get into the video. So first of all, I'm going to be using Trading 212 to look at these ETFs. So this is my portfolio, but first we're just going to type in SP500 into the search bar to give us the most popular ETFs at the moment. So you can see the top of the list is Vanguard, then it goes to iShares, some more Vanguard, iShares, and then we have Invesco and more iShares here. And then there's a load others at the bottom here. They say view only, which means that we can't actually buy into these ETFs, but you can still view them on the platform. So as you can see, there's a lot of different S&P 500 ETFs on this platform. So first of all, let's talk about the currencies that these ETFs are traded in. Now, when you're looking at the ETF, you want to pick an ETF that is traded on the London Stock Exchange. And when you click into the ETF, it shows a pound value or it shows a pence value. So that means you're trading in pound sterling and you won't be charged a conversion fee or a forex fee. For example, you could select an ETF that is traded on a different exchange, so the German exchange or the Italian exchange here. So this one, the German exchange in euros, or the Italian exchange also in euros. But it is also possible to pick the London Stock Exchange like this ETF here, and it's traded in dollars, which means that you will be charged a forex fee when you buy this ETF. But to narrow down which ETFs we're going to look at today, all in pounds, I've actually made a watch list, which I've called the S&P 500 ETFs, which you can see here. I've got iShares ETFs, Vanguard ETFs, Invesco ETFs, and one Xtrackers ETF. Now, all of these are slightly different, and I'm going to go through all of them in this video. So first of all, the most popular ETFs on this platform are actually Vanguard's. Now, Vanguard do have their own platform, but you can buy Vanguard ETFs on Trading 212. So with Vanguard's two S&P 500 ETFs on Trading 212, they have VUSA, which is the distribution version, and VUAG, which is the accumulating version. And you can see that at the top of the accumulating version, it says ACC in brackets. And at the top of the distributing version, it has DIST in brackets here. So when you buy into these ETFs, you're buying a portion of loads of different companies, and some of these companies pay dividends. And you will receive dividends quarterly from the distributing version of these ETFs, and the accumulating version, VUAG, will actually reinvest these dividends back into the position. So you won't see the dividends paid back to you, but it should actually increase the stock price. So the two versions for the distributing and accumulating for iShares are actually the RUSA, which is the distributing version, and the accumulating version is CSP1. If we take a look at the performance difference between distributing and accumulating, so VUSA is the distributing version, over the last year has returned 29%, and VUAG, which is the accumulating version, has returned 30.51%. So you can see that the accumulating version has slightly outperformed in terms of the price, but with VUSA, you will receive a small dividend, which should make up that slight difference. So an important factor when looking at these ETFs is you should actually come down to the bottom and look at instrument details. So when you click into instrument details and then go to key information document down here, it will take you to a PDF document which shows you all the different things that make up this ETF, all the different things that you probably should read before investing into this ETF. So this is the key information document for the distribution version on Vanguard. But if we come back to Trading 212 and we go to the iShares one, come down to the bottom, we can actually see the positions in the portfolio, which we'll go over later. But if we come down to the key information document, we can see this is the iShares one. Now, an important part is actually just reading through the different lines that they have on this document. But one of the most important bits is this line here, which says the fund intends to replicate the index by holding the equity securities which make up the index in similar proportions to it. So that basically means that they're buying parts of the index, so the actual assets in the index, to try to actually replicate the S&P 500 in its entirety. But if we come back to Trading 212 and we go to the Invesco ETF, so this one is the Invesco S&P 500 ETF, or SPXP. Come down to the bottom to the instrument details, the key document information, and we come up to this line here. This one says, to achieve the objective, the fund will use unfunded swaps. So swaps. These swaps are an agreement between the fund and an approved counterparty. So in short, this basically means that they aim to replicate the performance of the index with a swap. This means the ETF enters into a contract with a financial institution which is obliged to deliver the index return in exchange for a fee. Counterparty risk is applicable, but it is reduced by various security measures. You can read more at the link in the description. Also, this does avoid withholding tax, which you do have to pay on some dividends from the US, but this is avoided effectively because the securities are not directly held. So that is a big difference why Invesco is not necessarily as popular because it doesn't hold the actual securities themselves, it has a swap. But this takes me to my next point, which is the fees for each of these ETFs. If we come over to Vanguard and again come back down to the instrument details, go to instrument details to key information document. This brings us back to this page. Now, the important piece of information in this document is down here, which gives us the ongoing charges. Now, the ongoing charge for Vanguard ETFs or Vanguard S&P 500 ETFs is 0.07%. If we then have a look at the same accumulating ETF, but under iShares, the same one, instrument details, key information document, and we come down to the same place down here, we see the ongoing charges are 0.07%. They are the same. So iShares and Vanguard have the same ongoing charges for their ETF. We come back to Trading 212 and we go to the Invesco S&P 500 ETF, the accumulating version, so the exact same version of the ETF. Come to instrument details, key information document, and then we come down here, we see here that the ongoing charges are 0.05%. So the Invesco S&P 500 ETF is actually slightly cheaper in terms of the charges that they input on your ETF. They don't come out of your account. They don't show when you make a transaction. They're actually put into the performance of the ETF, so they come off of the returns. So you will not see these charges, but over the long run, these charges or the difference in these charges will make a big effect on your ETF performance. And even though it is only 0.02%, it's definitely something to think about when making your choice about which ETF to invest in. So the final thing I want to actually talk about is the hedged version of these ETFs. So when I talk about hedging, I mean that we are hedging for the currency, so a currency hedge. So when we look at SPXP, which is the Invesco S&P 500 accumulative ETF, we see a 30.72% return. Now, this ETF is just buying the assets. There's no appreciation for the fact that when they buy the asset or when they buy the swap, they're buying it in dollars, and then they convert it to pounds for us. We don't get the Forex fee, but we're still buying it in pounds. They're buying it in dollars. There's a difference in the fee. But when we come over to this ETF, for example, so this is the Invesco S&P 500 ETF, G500. This is a hedged ETF. Now you can see that the performance is 24.65%. This is slightly less, but this is accounting for the difference between pounds and dollars. So the fluctuations in the currency are actually accounted for, therefore giving a more accurate representation of what the S&P 500 is actually going to return. The funny thing is that when the dollar is doing really, really well, so the S&P 500 might not necessarily do as well, I believe the hedged version of the ETF will do worse. But when the pound is doing better, I do believe that the hedged version will do better. I do believe that the Vanguard ETFs and these two iShares ETFs are not hedged versions. The iShares hedged version is GSPX. So the way to see whether it's a hedged version or not is if you go into instrument details, key information document, like I keep saying, you will see that in the top it says GBP hedged. So that is how you find it. And again, if we come down to ongoing charges, the ongoing charge for this hedged version is 0.1%. So the charges are slightly higher. There is one more company that I want to talk about, which is Xtrackers. Now, this is a similar type to the Invesco ETFs. So this is a swaps ETF, and it actually tells you in the name, which is very helpful. It's very transparent. And I think they do a good job with actually making it transparent because it makes you think it's different. Therefore, you do a bit more investigation. So the Xtrackers S&P 500 swap accumulative ETF is XSPX. So this is a non-hedged version. It's a swap version. So you're not buying the actual asset. You're buying the swaps, and it's in pence. And you can see that the return is 30.64%. Now, there's one thing I didn't actually mention in this video, which is the difference between the different ETFs, what their holdings are. Now, I believe this is a very small impact on a choice between the ETFs because they're very similar in what they're holding. And also most of the ETFs do rebalance every so often to make sure that they're very accurate compared to what the S&P 500 is saying. So when I'm talking about this, I mean, it's the holdings that they hold. So when I go to IUSA, the iShares S&P 500 ETF, they have 6.9% in Apple, 6.9% in Nvidia, 6.1% in Microsoft, and so on and so on. These holdings are weighted by how big they are in the index themselves. So the bigger a company is, or the higher their market value, the more percent that they will have in these ETFs. You can get equal weighted ETFs, but generally those do not perform as well as the accurately market weighted ETFs. So with all of those things in mind, there is a choice to make when investing in an S&P 500 ETF. You can't just say, this is the best ETF to invest in and just pick that one. Some people will pick Vanguard, some people will pick iShares, and some people will pick Invesco, and there are others to pick from. At the end of the day, it's personal preference. Some people may say it's better to invest in the Vanguard S&P 500 ETF, while others might actually just tell you to invest in Bitcoin. It is your decision. Which of these ETFs do you think is the best to invest in? Let me know down in the comments, and I'll catch you in the next video.